And every bull market, of course, here in 21, 17, 13, we saw the red dots, the overbought situations, RSIs above 80. We haven't seen any red dots yet. So the big question, of course, now is red or no red. Will we see FOMO and RSI above 80 again?
Hello everyone, this is BTC Insight and welcome to yet another deep dive into BTC Insight. Before we jump in, make sure to hit that like button and subscribe if you haven't yet. You won't want to miss this.
September ended with Bitcoin at $114,000, the second highest monthly close in history. More importantly, it's the fifth month in a row where Bitcoin has closed above the six-figure threshold. For years, $100,000 was considered a holy grail number, a line of resistance that skeptics thought Bitcoin would never sustainably break. Now, it has transformed into support. PlanB points out that while 2 out of 3 people still think Bitcoin could fall back below $100,000, he disagrees. Why? Because this rally is not built on leverage, speculation, or hype. It's not a paper Bitcoin pump at the top of a bubble. Instead, it's grounded in fundamental forces driving all assets higher. Gold is at all-time highs, stocks are up, and even real estate is rallying. The common denominator? Money printing and fiat debasement.
Bitcoin closed September at $114,000, and that's the second highest monthly close. It's also the fifth month in a row that Bitcoin closed above 100,000. So what we are seeing is that the 100,000 barrier, an important psychological barrier, used to be resistance, but that turned into support at the moment. So I know there's 2 out of 3 people that think that Bitcoin can still drop below 100,000 again. I don't think it will, because current rally is not based on paper Bitcoin or some top of a bull market. It is a proper rally, and in fact, all other assets are rallying too. So gold is at all-time high levels. Same is true for stocks, real estate, Bitcoin. So the underlying cause of all those assets to rise, of course, is the money printing, the debasement of our currency. The entire reason why Bitcoin was created, as a hedge against that money printing. So as long as governments are printing money and the money supply increases, Bitcoin will go up, as will other assets, but Bitcoin will go up faster. About this trend that we saw in the past. So I think it's real. I think it's really interesting that we finally took this $100,000 barrier. Now notice the chart has a new color overlay. It's not months of until the next halving anymore, but it's the relative strength index, the RSI. I think that's more indicative of what's about to come, and it gives more information about the trend. We'll dive deeper into the RSI, but what we see at the moment is that the really high levels, the red dots, we haven't seen them yet. We saw some orange, but not red yet. And if we go to the chart from low to high, we see the 200-week moving average. That's the dark black line. It's at 53,000 at the moment. Realized price almost the same. 54,000. Bitcoin 114, and stock to flow at about 500. Well, 114, of course, as we speak, Bitcoin has gone up a little bit more. It's about 120 now, but it's at all-time high levels. Same is true, of course, for the moving average and the realized price. But very interesting this month. The realized price, so the gray line, jumped over the moving average, the 200-week moving average, the black line. And if we look in the past when that happened, so when you have a bear market and then the moving average and realized prices get together, and then the realized price pumps. And here too, we see a very deep bear market in 2022. That was the worst bear market ever, in my opinion, below the 200-week moving average and touching the realized price here, below the realized price. So we came from very deep, from a deep bear market. So I'm not surprised that the new all-time high, if you will, the new bull market takes a little longer, because we had really big dip here, and there's a lot of trauma in the market, people that lost money because of this FTX thing. So right now we're recovering, and the realized price has once again jumped above the 200-week moving average. Very important point, I think. So my opinion is that it will diverge further from the moving average, as it did here in this bull market in 2021, in 2017, and in 2013.
PlanB's charts now use a new overlay, the Relative Strength Index, RSI, rather than just months to halving. RSI measures the strength of price movements and signals when markets are overheated. Right now, Bitcoin's RSI sits around 69. Overbought territory begins above 80, which on PlanB's charts are marked with red dots. Historically, every bull market peak in 2013, 2017, and 2021 featured extended periods of red RSI levels. And here's the key point. We haven't seen a single red dot yet in this cycle.
It's at 69 right now. And 69 is not in overbought territory. That would be 80 plus, the red dots. It's just, well, sort of the average RSI level that Bitcoin moves in, and it confirms a solid uptrend. And every bull market, of course, here in 21, 17, 13, we saw the red dots, the overbought situations, RSIs above 80. We haven't seen any red dots yet. So the big question, of course, now is red or no red. Will we see FOMO and RSI above 80 again? I expect to see some red dots, at least in this cycle, probably even this year in the last quarter or in the first quarter of next year. But time will tell. And what I do know, however, and that's very important too, is you can't have blue, so fear and a crash, without having red, greed, and FOMO, in my opinion. So as long as there's no red, we don't have to worry about blue either. So no crash risk at the moment. Then if we look at the moving averages, we have seen the 200-week moving average all the way up to 53. But if we look at the gray line, it's the geometric moving average, and it's at 45. The difference between the two is this is just the average of all the closing price of the last 4 years, and the geometric mean is the internal rate of return, if you will. So you just look current BTC price and then 4 years back, and then you calculate the constant interest rate or the constant return needed to get from the starting point to the end point. That's the geometric return, and also that's how you calculate the geometric mean. Important thing is that they're not the geometric mean is always lower than the arithmetic mean, and that's by definition, and the difference is volatility. So the geometric mean is the 200-week arithmetic mean minus some volatility factor. And so if those lines diverge, as they are now, Volatility is getting into the system. Momentum is building, and of course that's almost always a bull market followed by a slight bear market. So yeah, I think this further proves that momentum is building, and momentum is a force. So it's like a train. You can't stop it instantly. It will go on for some time. Realized price. Realized price is the on-chain data-driven indicator, and it's the cost price of the average Bitcoin, and it's at the moment at 54, higher than the 200-week moving average. That was 53, right? So we can see that as a bear market bottom. In all the bear markets, 15, 18, and 22, we saw the realized price acting as a floor. So the 2-year realized price, and that's only measured all the coins that are bought last 2 years, not the entire period. So you sort of filter out all the lost coins in the beginning, the Satoshi coins, 1 million. It gives almost the same line, but it's at a slightly higher level. That's the blue line. It's at 92 at the moment. And then you can take an even shorter period, only look at the short-term supply, the 5-month realized price. It's at 111,000. That's the yellow line.
Another key metric PlanB uses is the realized price broken down by different time horizons. Long-term holders have a realized price around $92,000. Short-term holders, those who bought in the last 5 months, have a realized price of about $111,000. This shows us where different groups of investors are sitting. Short-term investors are already profitable above $111, creating a near-term floor just above $100. Long-term holders are even more comfortable sitting on deep profits.
That's it for today's look into BTC Insight. If you enjoyed this deep dive, hit that like button, drop your thoughts in the comments, and subscribe to stay on top of all the latest insights. Keep questioning, keep learning, and we'll catch you in the next one.